Today's financial market update, the most important market insights you need to know. Market sentiment is bullish, mild. Market is performing well across major indices. Index performance, S&P 500 at plus 0.74%, Dow Jones at plus 0.78%, NASDAQ at plus 1.7%, Russell 2000 at 1.09%. The stock market is showing a bullish sentiment influenced by mixed signals and sector performance variations. The mixed market sentiment indicates that some sectors are thriving while others are struggling, affecting overall investor confidence. Consider monitoring innovative firms like ACLX for potential investment opportunities, as strong trial results can lead to sustained growth. U.S. job and inflation data remains stable, showing resilience against potential manipulation in reporting. The stable job and inflation data suggests that the economy is currently robust, which may influence investor confidence positively. Consider investing in inflation-hedged assets like commodities or real estate, as rising tariffs may elevate prices further. Henry Schein shares increased by 4.8% following Q4 2025 results, despite a revenue miss at $3.44 billion. Henry Schein's mixed results indicate resilience, but the revenue miss may cause investor caution regarding future performance. Consider investing in Henry Schein for potential long-term growth, but monitor upcoming quarters for consistency in performance. Consumer confidence is declining, which directly influences spending habits and investment strategies in various sectors. The dip in consumer sentiment suggests that investors should be wary of potential downturns in discretionary spending and growth stocks. Consider reallocating investments towards consumer staples, as these may provide stability during periods of declining consumer confidence. The effective federal funds rate has declined from 4.33% in February 2025 to 3.64% in January 2026. The reduction in interest rates often boosts market sentiment, making equities more attractive compared to fixed income investments. Consider increasing allocations to high-growth sectors such as technology and consumer discretionary, which typically perform well in lower interest environments. President Trump's recent tariff revisions are projected to alter GDP growth forecasts by approximately 0.5% in the upcoming quarters. The adjustment in tariffs indicates a potential slowdown in economic activity, which could lead to reduced consumer spending and investment. Consider diversifying portfolios into sectors such as utilities and consumer staples, which tend to be more resilient during economic slowdowns. Chevron's sale of Venezuelan Boscan crude to Reliance Industries is the first since December 2023, breaking a 6-year pause. This sale suggests a possible normalization of trade relations between the U.S. and Venezuela, impacting future crude supply dynamics globally. Investors should monitor companies involved in alternative crude supply chains, as they may benefit from increasing Venezuelan oil flows. Investors have withdrawn $4.3 billion from spot Bitcoin ETFs over the past 5 weeks, indicating shifting market sentiments. The significant withdrawal from Bitcoin ETFs suggests that investors are seeking safer assets amidst heightened market volatility and uncertainty. Consider diversifying your portfolio by investing in safe haven currencies like the Swiss franc or Japanese yen to mitigate risks. Chevron has completed its first sale of Venezuelan crude oil to India's Reliance Industries since December 2023, marking a significant trade revival. The Chevron deal signals a potential easing of sanctions on Venezuelan oil, which may influence global supply and pricing strategies for crude oil. Consider investing in energy sector ETFs that may benefit from shifts in oil supply chains, particularly those focusing on emerging markets. Chevron completed its first sale of Venezuelan crude oil to India in 6 years, indicating a shift in global oil dynamics. Chevron's re-engagement with Venezuela suggests potential changes in crude supply chains, which could affect pricing and availability. Consider investing in companies like Chevron and Diamondback Energy, as they demonstrate resilience and shareholder value enhancement in a volatile market. President Trump has increased tariffs on Chinese goods to 15% as of February 23, 2026, impacting trade relationships. The increase in tariffs could lead to higher consumer prices and reduced demand for Chinese exports, signaling potential market contractions. Consider diversifying portfolios by investing in AI-driven companies, as they may benefit from China's tech advancements and growing market demand. U.S. bond market volatility has increased significantly this month, with a notable rise in yield fluctuations. The rise in bond market volatility signals increased uncertainty, leading investors to reassess risk in their fixed income portfolios. Consider diversifying into corporate bonds or municipal bonds, which may offer better yields amidst Treasury uncertainty. Kroger is set to open a new marketplace store in McKinney on February 27, 2026, with a projected early 2027 opening. Kroger's expansion reflects confidence in the local economy and suggests sustained consumer demand, which is vital for retail investors. Consider investing in retail properties in North Texas, especially near new Kroger developments, to capitalize on increased foot traffic and consumer spending. Private equity firms are increasingly focusing on distressed assets due to a changing economic landscape and fluctuating valuations. The shift towards distressed assets signals a cautious approach by private equity firms, reflecting concerns over future economic stability and valuations. Consider diversifying portfolios by targeting undervalued firms or distressed assets in sectors poised for recovery amid economic uncertainty. FactSet stock surged 7% following the integration of the AI model Claude, enhancing its financial data offerings. The rise in FactSet stock indicates strong market confidence in AI-driven innovations, suggesting a trend toward tech adoption in finance. Consider investing in companies like FactSet that are successfully integrating AI, as they may offer strong growth potential in the tech sector. Bitcoin's price has fallen below $65,000, leading to significant market turbulence and $500 million in liquidations. The drop in Bitcoin's price signals a potential shift in investor sentiment, heightening concerns about future volatility in the cryptocurrency market. Consider dollar cost averaging into Bitcoin positions during this dip to capitalize on potential long-term recovery while managing risk. Constellation Energy has postponed its yearly guidance until March, affecting short-term investor expectations. The delay in guidance may signal uncertainty, yet the rising stock price indicates that investors remain optimistic about the company's future. Consider monitoring Constellation Energy's stock trends closely, as this may present a buying opportunity amidst current market confidence. Thank you for watching FERPA, your financial Sherpa.